Hi guys, I thought I'd start this video just by talking about how I made my various points during the week. I made a reasonable income out of this week before I go on to look at the markets, just so that you can start to think about some of the key aspects in trading and your daily trading life, if you are a day trader. That is, having your targets for your daily points target to make your income, the setups, exit strategy, and general money management and handling yourself in these markets during the course of the day, to make sure that you walk away at the end of the day, close your machine down, and have made enough points and not over traded. So let's just take a look at this trade in the euro yen. On Friday morning, came to the screens. We'd already had a seller's bar on Thursday, so we'd broken this box in the euro yen. Now we couldn't find a trade on the euro and the pound, which I like to try and find trades for, because they are the most liquid currencies. I know the characteristics of those currencies very, very thoroughly, so I prefer generally to stick to those two trades, to make my money out of those two trades. But I felt on Friday morning, as we were looking through the markets together, that they were not setting up, they're moving sideways, they're extended, and so therefore we couldn't get any setups. In the meantime, I was already swing trade short this on the back of this star, waited all week, been banging on about this in the videos all week, keeping my stop just out of trouble, just above these bars here at 115.30. Finally started to get paid on the Thursday with this bar down to the 8. It came back to touch the bottom of this box before dropping right down here to 113. So on Friday morning, when we couldn't find a dollar pair to trade, we saw the move up to the bottom of the box here in the 60-minute chart, and then the failure, which engulfed all the price action to the left here. So it closed below. That was one of the key signals. Let's draw a box. I'll pull this box over here. You can start to see what I'm looking at. So there you can see the way I've drawn this rectangular box right over here. You can see it moved right into resistance on the daily and the 60 minutes. We had a seller's bar, the very next 60-minute bar, which came right down and closed just below this price action here, just below it. So when it pulled back through the 200 EMA but couldn't break the 8 and the 20 here, in a 15-minute chart it put a reversal bar under here. So I suggested a short in the room, and then within a couple of hours we got 150 points. In fact, probably about an hour and a half or less, we got a move right down to the 113 level here. So a great trade. So that was 150 points at the full extent on Monday. I know some of you took 50 points, some of you took 110 points, and so on. Let's look at some other trades. On the Wednesday room we took of this one, we had a close below on this bar here, but a close below all this price action here. This is why horizontal support and resistance is much more important than trend lines, because when that closed and engulfed this price action here, I suggested a short back to this bar here, a very technical pullback, and it moved right down for a very nice technical exit. To me, when it comes down to this 200 EMA with the RSI, I just want to get out. That I've met my target, very happy with that. A lot of support down here in many other time frames, including the daily. So very happy to sit out. I didn't even attempt to manage my stop. I was just in at the pullback here and out at the support for, let me see, that was 139.57. 39.57. So it's about 80 points, I think. About 80 point move. Very nice. Now, another good trade. Nice little reversal bars just under here. I think that was in the middle of the night. Yeah, this is the middle of the night. In the morning when we came to these charts, they were just moving sideways. here we were on Friday, just not doing much. Hence the reason why we trade the euro yen and not this one. This was a good wedge breakout. If you had your charts marked up, it's a good wedge breakout on this one here. 50 EMA break with a 200 EMA above, but it's a pretty convincing setup down here. But I didn't trade that. Right, pound. Let's have a look at some of the trades we took during the week. We took this one here. This was the reversal bar under the 50 EMA. I do like that trade a lot. So I just went short on the close of that 60-minute bar. I stopped above the bar here, and then got a really nice move right down to the daily 50 EMA. The daily 50 EMA was down here. If you're in the trade, one thing you could have done to manage your trade is just keep your stop at that level. You keep your stop at that level at first, and when you get this bar here at 3 o'clock, I think it is, yeah, you get the 3 o'clock bar, just move it above that 3 o'clock bar, stay in it, and then it eventually winds right down to the daily 50 EMA. Now I did go long down here because on a 240-minute chart, I called it in the room, there was a hammer Friday afternoon. Must have been the 2 o'clock 240-minute bar. There it is. Yeah, there's the 2 o'clock 240-minute bar. I liked it a lot. There's a major support. So I'm long the pound still on the back of this hammer. That alone has generated I think 60-70 points already. I'm going to keep my stop to just break even, and then treating it as a 240-minute chart, and there is a daily setup, but because I took this in a 240-minute chart, I'm going to keep my 240-minute entry. Okay. Now the oil. Now I'm not suggesting that if you're an intermediate trader, do not trade the oil, even the 60 minutes. Just for others, for advanced traders, just want to go through some of these 60-minute setups, which were very good. This is one we took. I have to say I did get out too early in this one. I set my targets in other time frames and got out too early on this one. But here we have a 50 EMA break. There's the pullback. We break the trend line and we come down for a couple of hundred, or no, in actual fact I think it was about 400 points or something ridiculous. That was 104.58, and at the low it was 162. So these 60-minute setups on the oil are really good. You can see with the trend line coming across the top, we made a much lower high here, very weak, really couldn't get going. So that 50 EMA break with all the compression moving averages was very good. And then when the Saudis started rioting, it popped right up to retest that trend line. Look, when it broke, it came right up to test it, and then after that sold off, and we ended up just above the 100 mark. Okay, so very nice 60-minute setup there. What else? Trying to think what other 60-minute setups. Got very choppy, very sideways here, as you can see in the daily chart as well. This is the power of the wedge breakouts here. So it breaks up on 60-minute oil, pulls back to test the trend line support, and we run for quite a few points. 101.80 right up to 106.85. So if you get these 60-minute oil setups, they are very good. You've got to have decent stops. This one here, you need on a pullback there at 101.75. Really, I suppose if you went, in this particular instance, you go sort of 3, 4, 5 bars back for a 30 point stop. What time of the day was that? Oh, at 5 in the morning. Right, okay. 6, 7. Okay, so 7, 8 o'clock in the morning. It broke this resistance. So all these pullbacks to this support was a great place to get in, and then you need to come back to have your stop back here below the 8 and the 20 at 102 or just under 101. just under 102, and the entry was 102.50. So again, it's not that great a stop in that particular instance if you get a quality setup like that. And it's typical in lots of instruments like this that sorry about that, when you get the break up, then a move back to support is typical and gathers volume. So eventually at 1 o'clock, as the US traders get to their desk, the volume comes in and it just takes off. That's significant. At the 12 o'clock level, we've seen quite a few moves around about the 11 and 12 o'clock time as the US traders are getting to their desks. So you're getting more and more volume coming into the markets, and that's what's happening here. One other intraday chart you could do, if you've got very jittery markets selling off intraday, particularly on the big data, one thing you could do is, I much prefer the pound US dollar to trade. One thing you could do is just look at this US dollar CAD, because the US dollar CAD is a big mover when the markets get very jittery. And here you can see we've got a lot of support down here at 96.80, and you get this wedge breakout in 60 minutes. There's the bar that confirms the breakout. There's the pullback to about 20-30% of that bar, and then we run next 2-3 hours. We run and hit major resistance and sell off here with the RSI very high. Okay, so that's how I've been making my money during the week, just waiting very patiently for the setups, the 50 EMA breaks on the 60 minutes. Sometimes I look for a 50 EMA break in the 15 minutes if all the other time frames line up. So I call it my sort of domino trade. If the 15 minute kicks in for a 50 EMA break, and then you can see the 60 and all the other time frames lining up within that trend, then I sometimes will go as low as 15 minutes, but more often than not I will take the 60-minute charts. But the room's working well. We've been looking at exit strategies, climactic breakouts, and of course we're always looking at entries and exit strategies, so a lot of work. The thing I suppose I want to really keep on emphasizing maybe a little bit more is the emphasis on horizontal support and resistance. It's all basic stuff, I know you all know it, but I think it's important to just keep on reminding you to get you to look left. So when this US dollar CAD breaks right up here to these highs, to the very highs up on here, you can see if you look left, that's the price action that's more likely going to determine that that's going to sell off. You get shooting stars with high RSI, no extreme, but gap to the 8, which is critical, and then it drops. Let's just look at that on the pound. There's a shooting star up there with a big gap to the 8, high RSI. That price level was key, as you can see from these previous days here. So a reversal bar up there with a very, very nice gap to the 8. At the very least that gap to the 8 was going to be filled. You could have got your stop to break even at that point. It just sat there because the rest of the afternoon it just continued to drop. Trend traders get in on 50 EMA break and it drops right down here to the RSI. So this is your swing. That area there, if you look at that swing from the highs to the lows, what you've done is you've taken that swing from the top RSI to the low RSI. Okay? So learn to stay in these trades. Don't take your profits too early. You have to sit there for a while, possibly an hour, maybe 2 hours, with your stop where it is, where you started from, and then only then start to lock in profits. So just trust your setup, be prepared to get stopped out, because if you stick to your rules and stay in the trade, then you'll make your day's money. If you're jumping in and out these markets, then you're paying lots of spreads and you're risking that you will miss the moves if you're jumping in and out instead of staying in these trades. Okay, so we'll work on that in the room. If you're not in the room and would like to join the room and you're able to join the room, then let me know. Okay, let's get on with some chart observations now.